Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DARDEN Restaurants INC quarterly report. Darden Restaurants Inc. operates a diverse portfolio of full-service restaurants across the United States and Canada. The company's brands include Olive Garden Longhorn Steakhouse Cheddar's Scratch Kitchen Chai's Yard House, Ruth's Chris Steak, House The Capital Grill Seasons 52 Eddie V's Prime, Seafood Bahama Breeze The Capital Burger. These brands cater to a wide range of tastes and preferences, offering everything from Italian cuisine at Olive Garden to upscale steakhouse experiences at Ruth's Chris. The recent surge in Darden Restaurants Inc.'s DRI stock price can be attributed to several key factors that have contributed to its impressive growth of over 16.35% in the past year. A series of robust earnings reports, strategic acquisitions, and share repurchase programs have all played a significant role. Notably, Darden's operating results exceeded expectations, with revenue growth of 6% and earnings per share (EPS) surpassing analyst estimates. The company also announced a $1 billion share repurchase program and strong fiscal 2025 guidance, leading to a significant rally in the stock. Additionally, the acquisition of Chai's Holdings added 103 restaurants to its portfolio, contributing to increased sales figures. Analyst upgrades and bullish outlook have also driven investor confidence, with many maintaining or upgrading their ratings and price targets due to Darden's strong earnings and efforts to expand takeout and delivery services. Furthermore, partnerships such as the one with Uber for delivery services at 100 Olive Garden restaurants have further boosted investor confidence. Overall, a combination of strong financial performance, strategic acquisitions, and positive analyst sentiment has driven Darden Restaurants Inc.'s stock price increase in the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the opening of new restaurants, with 125 net new locations contributing to sales. Additionally, a blended same-restaurant sales increase of 4.7% and the acquisition of 103 Chai's restaurants have also contributed to revenue growth. Furthermore, increases in average check for fine dining segment and revenue from new restaurants for Olive Garden and Longhorn Steakhouse segments have also boosted revenue. On the other hand, revenue decline is primarily driven by a decrease in restaurant labor expenses for Longhorn Steakhouse segment, which has resulted in a 4.1% decline. The sale of 8 Olive Garden Canada locations and decreases in same-restaurant sales for fine dining and Longhorn Steakhouse segments have also contributed to revenue decline. Overall, the key drivers of revenue growth are increases in food and beverage revenue for Olive Garden segment and a decrease in restaurant labor expenses for fine dining segment. Conversely, the key drivers of revenue decline are decreases in restaurant labor expenses for Longhorn Steakhouse segment and an increase in purchases of land, buildings, and equipment for other business segment. Net income and profit margins. A year of growth, the financial performance of a company has shown significant improvement over the past year, with notable increases in net income and profit margins. Net income rose by 24.6% from $207,200,000 in 2024 to $257,800,000 in 2025. Driven primarily by higher net earnings and favorable timing of federal income tax payments. Profit margins also experienced a boost, with operating margin increasing by 1.4 percentage points to 11.1% and net earnings margin rising by 1 percentage point to 8.5%. However, the improvement in profit margins was not uniform across all segments, with some areas experiencing growth while others declined. Despite this variation, the overall trend suggests a positive shift in the company's financial performance. The company is generating a significant amount of positive operating cash flow, with $342.5 million in 2025 and $273.2 million in the first quarter of 2025. This indicates that the company's operations are producing more than enough cash to cover its expenses, resulting in a net positive cash flow from operating activities. Management is optimistic about the company's outlook, expecting sales growth of 7.5–8.5% in fiscal 2026 and planning to open approximately 65 new restaurants. The strategy focuses on growing same-restaurant sales, expanding through new locations, and investing in technology initiatives. Additionally, management expects Chai's results to contribute positively from the date of acquisition forward. However, it is unclear what will happen with the Bahama Breeze brand beyond fiscal 2026. The company has made several strategic moves through acquisitions and divestitures. Notably, the Chai's transaction is highlighted as a significant acquisition. On the other hand, the company has also engaged in divestitures, including the sale of 8 Olive Garden Canada locations. Additionally, there was a net loss of $100,000 from discontinued operations. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In the past 2 years, the company has paid out significant amounts in dividends, totaling $341.1 million as of August 2025. Additionally, it has also invested heavily in buying back shares, spending over $355 million on repurchasing stock between 2024 and 2025. That concludes the financial summary for DARDEN Restaurants INC. Feel free to comment below, and I will be happy to answer them when possible.